How's it going, everybody? Welcome back to Is It a Buy, where we talk about stocks and try to determine if they are with the buy or maybe a pass. My name is Corey. I'd just like to preface the video by saying I'm not a financial advisor. I'm just a guy who likes to talk about stocks, so please take what I say with a grain of salt, all right? Let's get into the video. How's it going, everybody? Happy Tuesday. Diamond backhand. I see you right here with the Tuesdays. I already know. All right, Lee, yo, what is up, dog? Cha-ching. Almost beat Lee to being first. If you ain't first, you're last. Diamond is on the way to the Sox game. We'll be wearing your hat. Oh, I freaking love it. Stream, hi. What's up, Pone? Let's see. Diane, hello, welcome. Damon says, I hope this next squeeze is to 100. Yes, I would love a push up to 100. And then even if it's a little bit slower, right? Yeah, we want the margin calls to happen. We want the stock to run up like freaking crazy, right? I would love to see, 100, 200, 300, 400. Realistically, it's probably going to be a little slower than that, unless we have some kind of crazy true margin calls where they find all these naked shorts and they start just forcing people to buy, right? And at that point, it is where diamond hands means everything, right? Because diamond hands at that point means you're not selling little by little, and if everyone's selling a little by little, that is theoretically messing up the squeeze, right? Because people will be selling and they'll be able to cover, and if they can cover, then eventually they're going to run out of we're going to run out of steam because they're purchased back the stocks. Again, always, that's just kind of the concept of the theory of it. Always make your own financial decisions, but just to give you guys kind of a theory of how it could go. Eric, Corey, how you doing? I'm glad I bought that dip yesterday down at 31.50. Poor Jim Cramer was losing his mind on TV today. Was he really? Yeah, Jim Cramer, that guy's all over the place. But honestly, yeah, that 31.50, yes, is beautiful, right? Imagine if you bought that dip yesterday, you're up 24% on what happened. I mean, man, it would feel so good to get in there, right? And this is something where you could have done your own TA. I mean, we've been doing it a long time. I hope that you guys look at these charts and you say, and hopefully that you're challenging yourself to say, okay, what do I think is going to happen, right? Just like how I do my TA, right? I say, well, I'm going to be looking for this. If it breaks that, then it's going to go down. I'm going to look for a hold here. And yesterday I talked about that George W, right? That double bottom, where I wasn't too upset with seeing this dip because that kind of set it up for a bullish run for today. And the way it ended yesterday, I mean, if we look at yesterday alone, it was over here, and then it was pretty bullish yesterday, right? It was pretty nice movement, especially after we bottomed out, and it was very bullish after that. So I was like, you know what? It's very possible today that we'll continue on this upward trend of the George W. Now we're back on these levels of support, right? This level of resistance 42.18 is now a level of support, and I hope that it will continue to bounce off of here, run up, bounce off of here. Well, we'll see another kind of situation where we had back here where we are super bullish, right? I would love to get back in this $50 to $60 consolidation range and hold there, right? Until it's primed and ready to go. Because at that range, these hedge funds are losing a lot of money in short interest, right? And that's what we look for. It's beautiful. But let's talk about AMC really quick. I'll get back to the chat. So AMC was up 24.47% in the regular trading hours. Just disgusting, right? It ended the day at $43.09, just looking amazing. So we can see here in the after hours, it is up another 0.63%, but we'll continue to watch that as we continue with the stream. All right. Just looking fantastic. Let's talk about GameStop. GameStop was up 10% on the day, 10.20% to be specific, at $191.18. And the after hours currently down 0.3%, but no big deal for me. Just looking, I mean, beautiful, right? They both had that George W. Actually, the market looked kind of pretty green over here. Now that I'm looking at this, I haven't really looked at the market as a whole. One that I am keeping an eye on is right here, Carnival Cruise Line. They had that George W. They're looking pretty good. I said yesterday that I love this stock below $20 because of where it's been, where I think it's going to go with the economy and everything. As long as the economy doesn't close back down, then I think it's going to be a good stock. I think it's going to be a very good stock. Even here at $21, $22, anything below 25. I mean, if we look at the last 3 months, right? Look, I mean, look, it's just been, man, we can even, what does 6 months look like? Okay, here we go. Even 6 months, it's been above, you know, $22. When was this? Right here. For all of this time since February, it's been above there. And now, you know, it's just kind of, I feel like this is a very good discount. This is something that buying the dip, I think, would be very lucrative in my opinion. Just looking fantastic. I wonder what these options are looking like actually. We got one for Friday and it went to 22. What's my break even? 22.19. Boy, oh boy, this could be nice. What do you about 100 of these? What would that cost? Oh my goodness. Crazy moves. I just like seeing these big numbers. All right, so continuing on here. Okay, so that is that. Let's go ahead and take a look at the tops for the day, and we'll see what's going on in Ortex. Or let me get some in the chat first. Damon says, I leave to college in a month and I'm nervous to live by myself. Damon, you know, hopefully you've been preparing for that. I was pretty fortunate, you know. My mom just taught me very well, you know, how to do my laundry, cook, blah blah blah, all that good stuff. And so I was pretty prepared. I felt pretty prepared living on my own. I was basically practicing doing it while living at home. And if that's the case for you, you know, you still have a month. I would practice, like, cook your own meals, do this and that, and make sure you're taking care of yourself, and just see how it's going. And if you have any questions, well, hopefully you have someone at home that can help guide you, you know. Even things, little things like cleaning, right? What cleaning supplies to use, how to clean it, blah blah blah, things like that. So hopefully that helps you out a little bit. Chris, what a day, absolutely. Natalie says, I could not wait for today's live. Very exciting day for our market. Absolutely, right? And yes, thank you for saying that, because sometimes it's like, man, I'm going live every single day. Like, are people getting sick of this yet? Like, are people tired of hearing me talk? Are people over it? And you know, that sometimes it's nice to hear that people are actually interested, looking forward to like some kind of live stream, just talking about this stuff. And that makes me happy. So thank you for saying that. Ryan with thank you for subscribing with the subscription. Let's see. Oh boy, getting caught up. Black and white. I'm not in black and white. Not gonna fall for it. Such a beautiful Tuesday. Tendy Tuesday. Philip, hi, welcome. Macamania, what's up? Penny, diamond hands, apes together strong to the moon. Angelina, welcome, hello. Starfish doesn't want to see 30 again. Yeah, I mean, here's the deal. Did $30 feel good? Not exactly, but you know what? Were you calm at $30? You know, I was oddly calm at $30, right? It's all like, you know, sure, it's a little crazy there, you know, but in reality, like, what do I think is going to happen? Like, what do you think is going to happen? And so that was able to, that really helped me a lot. I see here who asked that. Philip says, do you expect a retracement tomorrow? If so, to which level? Well, let's take a look, right? We can take a quick look. We'll look at the 5-day. We'll look a little more microscopically, and we can see right here. Well, I'm going to look a little more macroscopically, and I'll show you why. Here we go. Okay, so we'll look at the 1 month, right? And we're mostly looking for back here. So the reason I have this level of support here, resistance, is because, you know, it's something that we've respected and kind of broke through before. So this seems like a pretty solid level of support. So what I'm going to be looking for is a bounce. I'm going to hope for that. I'm going to hope that we have a bounce at the very least back on this $42 level. You know, if it does retrace, right? Now it's very possible it'll fill in some of this, and I would probably be looking for a bounce around, you know, what is this? You know, even $40, I would hope for a bounce. Anything over 40, we can see right here. Actually, I just hate having so many lines here, but you can see it pretty strong right here, right? Like all these levels right here, all these touch points that we have within here. for this level of resistance turn into a level of support, right? It tested it, tested it once, twice, 3, 4 times. And trades, I got to give it to him because he always says he likes that 4. And historically with AMC, the 4 trend, I don't know exactly what he calls it, the 4-time trend, whenever it tests it 4 times, the 4th time it breaks through, right? Or test it 3 times, the 4th time's a breakthrough, whatever it is. But we got that today, and it's kind of is pretty legit. And so I'm going to be hoping for that level. So now if we do break, so I'm going to hope for a bounce here at 42. If we don't get that bounce, I'm going to hope for a bounce here around 39.58. And so that's what I'm going to be looking for a potential retracement. There's a few levels of support in here as well, but I'll just kind of put it a little bit lower for a little more microscopic price action. And so that's what I'm hoping for here. Now it's very possible we'll continue to run. We'll see 45 or something beautiful in here, and we'll resist at 45 or 46, whatever you want to call that, and we'll break through. So realistically, I think those are the 2 ways we can go, or multiple ways we can go, I suppose. But that's what I'm going to be looking for in tomorrow. Right, and if it does retrace here, you may want to look into buying the dip at 39 or whatever your financial goals are. Chris, what's up? What's up, Frank? TNA. What's up, William? Our lives. Hi, Apes. What a great day. Finally, Apes bringing good vibes. Well, the good vibes are always in this chat. Apes always have the good vibes in this chat. It's very easy. Remember, we talk about this, and I don't like to shill people, especially on a good day, but very easy to hold on these good days, these good green days, right? So easy to hold. I mean, easy to buy more, right, on these green days. So, I definitely feels nice to kind of like take that, I don't want to say pressure off, but it feels nice to have, that confirmation bias that we've been looking for, especially after this freaking bear run over here that we've had, right? I mean, since we'll call it around here, the end of last month, the very end of last month, early this month, just kind of this bear run hasn't really been feeling good. So to finally get a little bounce, while we're not back where we were, I think it sets us up to go in the right direction. And that's what I'm looking for in the end, right? Ken Griffin, no ban, just subscribe. Thank you, Ken. There we go. William, doesn't want to be greedy. William is gonna just hold out. William doesn't want to hold out for more than he needs. Okay, William is gonna sell his 10K shares for a cheap $1 million per share. Okay, it's not much, but it's honest work. Okay, that is one person strategy, and I hope it works out for you, William. UCF Knight, welcome. I'm sure I think, yeah, you were here before. I'm a Knight. Marty McFly, welcome. Okay, let's go and talk. Oh, CT, I see you there. David, I see you here. Welcome. Let's talk about Ortex really quick. So the Ortex data is pretty interesting, actually. So let's take a look here, because this Ortex data is kind of throwing me for a loop. And realistically, I say throw me for a loop, but I feel like I understand. So we can see here the shares on loan is currently 92 million, right? A little over 92 million. And with that being said, it has gone down, right, on paper. It went down a little bit. And it also happened with the utilization, right? The utilization is currently 87.26, which is down. And we can go ahead and check out what the utilization was. Utilization was around, over 90, we'll call it. Over 90, currently 87. So it did go down just a tad. And the short interest is currently at 14.15%, and the short interest has been, kind of fluctuating as well. And granted, keep in mind, these numbers may not be like the perfect numbers. I believe this is 65% of the exchanges, where this is these top numbers are about 80% 80% of the exchanges, something like that. So this isn't the whole market, right? But it's a little over 50%, sure. So with that in mind, these numbers could be fluctuating, and it could be, so many different things. If one brokerage decided the short interest should be less, if multiple decided it should be less, or whatever's happening, maybe the stock is down and it's been down for a while, so they decided, you know what, maybe this thing is over, maybe they're confused and they lowered it. Either way, I mean, I say lower it, it's really not low at all, like at all. Back in January, I mean, we had a crazy move off of 12.45%, and currently we're at 14%. So we've seen crazy stuff, right? And last time we had this crazy move, I mean, at its peak, it was the all-time high for this has been 19.64%. And whenever we ran up to $70, it was around, it was around 17.44% when we had our crazy run, right? Even whenever we had our first run from 14 to like $30, it was around 16% short interest. So we've seen moves from 12% all the way to 19%, right? And even at 19%, it kind of went down and then it started to cover. So kind of weird here, exactly the way it went. But either way, you can tell just by looking at it, historically, this chart is still trending upwards, right? And just like you would see with any kind of stock, you would hope to see with any kind of stock, right? Look at the S&P 500. S&P 500 over a long period of time, it goes up, and that's what we're seeing with the short interest continuing to go up, and I think it's primed and ready for a crazy launch. That's just what I think, and so that's what we see here. Now, as far as let's see. Okay, we have that. And so that's what I think is going on. Now, I don't let me say like, oh, this is going down a little bit, it's over. No. This is absolutely nothing at all, in my opinion. It's barely fluctuating. And remember, this does not include like synthetic shares and naked shorts, blah, 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 anything like that. So I think that these numbers are still extremely bullish. They're just changing a little bit, and maybe they could be calibrating a little more as to why it's moving, because it really doesn't make any sense. This huge jump up and then huge jump down. It makes me feel like maybe it's still there's some kind of calibration going on where it's not exactly, well, we know, right? These numbers are not exact numbers. They're more of a gist of things, right? What is the gist about where they are? They try to be as accurate as possible, of course, but as we know, it really can't be totally accurate. Smooth says, how bad is this getting in your opinion? Smooth, in my opinion, like for the hedge funds, I think it's getting very bad. I think it's continuing to get very bad, right? These guys are still, I mean, actually, I was over here and I saw some interesting, like I saw this one and I thought it was pretty interesting, but this is for GameStop as well as AMC, but AMC is the number one highest, and granted, I don't have any sources for this. This person didn't post any sources. This is kind of a fluff or whatever you want to call it, okay? Or let me talk to Chris really quick. Chris, thank you for the super chat. Chris says, love the channel. Thank you very much. I appreciate it. What are your thoughts for pre-market tomorrow morning? Pre-market, I would love to see some green pre-market. I mean, no one really knows. I did a TA just a second ago, but I'm not sure if you caught it. So basically for tomorrow, I think that I would not be surprised if we had a small retracement, right? I would personally love to see a bounce around 42.18 and to see it continue to run up and test this, $45 level of resistance here and continue to break through. But if it does break through this level of resistance or support, now it's currently level of support, previously level of resistance. If it breaks through this 42.18 for the downside, right, then I'm going to look for a bounce around 39.58. And if it breaks through again, then we have different levels of support in here, like 36. I would say about every $3 is pretty safe to say that there's a level of support / resistance in there. And so that's what I'll be looking for as far as that goes. But tomorrow, I don't know if I'd take a position early in the pre-market unless it starts to dip. But even then, you might want to make sure that it respects that level of support before you take a position. But hopefully that's helpful. All right, so talking about these catalysts, right? So there's so many things that are going wrong for the hedge funds, and in my opinion, nothing is going their way, right? Nothing. I mean, these guys are just in a terrible spot. I really feel that way. I mean, there's the AMC, so the S3 has a squeeze score of 100 out of 100, just maximum. All the DTCC rules, DTCC, NSCC, all these filings have been filed, and it's basically like structuring what would happen if there was a squeeze to not let these hedge funds and institutions be so over leveraged, be in a bad position. What happens if they get kicked out of like the membership of being in the DTCC, all these things that are happening. There's so many rules being filed and filed and filed and filed. Actually, we haven't even checked that. We'll check that in a second, see what else has been filed, because it's just getting crazy. We'll pull that up in just a second. Just so many things. And then there's, JP Morgan intraday margin calls. And some of these may be a little more hearsay, but GME stock split, page 13, GameStop NFT, some of these things I can't really confirm nor deny a lot of these, but anyway, so secondary book, people talking about the secondary book, I really don't know. And the secondary book is the one where it's saying the AMC price currently is actually $5,000 or $10,000, like $5,000 to $10,000, I should say. And again, I really can't. It doesn't really make much sense to me. I don't know why they would trade over there whenever they can just trade in the actual normal. If it's that, let's say one share is $5,000, right? Well, instead of buying one share for $5,000, why don't you buy 100 shares for $50? It doesn't really make much sense to me. So that's why I'm a little confused about this one, but I'm sure there's a reason it was brought up. We know about the dark pools, right? We know about this, that, like all this craziness, although the bots that they've been releasing, right? All these people like Eor Duseniski, giving a personal squeeze score of 10 out of 10. I really don't know what his credentials are, but the apes seem to love him. FINRA squeeze score is 99 out of 99. So there's so many great things that are happening for the apes, and these hedge funds are in my opinion, are in a terrible position. They really should have gotten out at $5 whenever they could have, and so far we haven't seen them get out at all. We can look even over here at just this information on like even the shares on loan and stuff, right? Like, oh, not that one, the shares on loan. And we can see that the shares on loan is still, it's down a little bit, but it's still, they have not covered their shares, right? There's still more to go. And again, this does not include these naked shares that we believe that the stock is short. I've seen a few DDs, and I'm trying to reach out to the authors of the DD to see if they want to come on the show and see if they want to talk about it. But I've seen some people who've done the math on how short these hedge funds may be based on just numbers that are given to us, right? And granted, this is FINRA numbers and the Fintel numbers and in all these different places, different sources. But if you can find a percentage that is based on the overall market or based on the overall amount of shares on loan, blah blah blah, then you may be able to reverse engineer and do the math on that, right? So it's just wild. So I'm very confident. I'm very pleased with everything the stock is doing, all the rules being filed. I know it sucks because it feels like it's taken forever, and it is taking forever. It's taking a long time relative to what apes thought, which is why the apes decided, hey, there's not going to be any more dates. And I have to agree with that. I was all about dates at first. Seemed to be a lot of good dates that were going to be bullish, quadruple witching, and so on. And I took off for the quadruple witching, and I streamed all day. It was wild, and no real crazy movement, which was a little disappointing. But At the end of the day, I think it's still looking really solid. And I think that at the end of the day, these hedge funds, like, why wouldn't they have just, if let's put it this way, why wouldn't they have covered all their shares if they're telling me again, it's cheaper for them to keep shorting the stock, keep spending a lot of money, billions of dollars to continue shorting the stock rather than just bite the bullet and buy all the shares. And that is very interesting to me from a business standpoint, financial standpoint for them. And that's why I'm so bullish, or one of the reasons at least. Oh gosh, here we go. What's up, Matt? What's up, Velocity? What's up, Mike? I know we had another Corey in here. What the heck? Thank you, Rose. Anyone have call options on AMC? Yes. Call options have been treating me very nicely. However, they're extremely expensive right now. So I'd be very careful with call options. Realistically, they're risky. I mean, they're so risky. But, if you would have gotten a call option back here, whenever they were out of the money, this $31 strike price or $32 strike price, when it was out of the money, I mean, there's some serious money to be made there. So definitely keep that in mind. I mean, if you think it's going to run tomorrow, I mean, keep in mind your break even for this, even for as soon as this Friday, is $46.82 if you want to break even, which is risky. I mean, you don't know which way it's going to go. We hope, and we can look at the technical analysis, and if you think there's going to be a breakout, then awesome. Make that decision for yourself. But I just be ready for anything. For anything. Umber, greetings all. Great day for AMC. Yes. The other Corey, Doppelganger, says, I'm trying to end the week in my off-grid cabin. Ooh, paid for by Hedgies. I hope y'all end your week in your own personal paradises. Yes, absolutely. That'd be very nice. Let's take a look at the DTCC filings. Let's see if anything's been filed more recently. Does Corey not talk about GME anymore? Smooth, I do talk about GameStop. I mean, realistically, I think they kind of trend together, right? I'm not too interested in talking about the reason I talk about AMC is because I feel like my channel is a little more geared toward AMC. I'm personally way more heavily invested in AMC just because of the cost that it took to get in, which I know doesn't make any sense because you're looking at percentages. Because if $100 goes up 100% in GameStop and $100 goes up 100% in AMC, it's the same dollar amount. And I understand that, but I'm just in AMC more, and I feel like AMC and GameStop are going to be the same situation, right? At the same time, I think they'll squeeze at the same time. When it's a true squeeze, I think they'll both squeeze at the same time. So take anything I say for AMC, and realistically, it still counts toward GameStop. The only thing I'm really not talking about GameStop is the what actually happened with their business decisions and things going on there. But I am rooting for GameStop. Don't get me wrong. I forgot what I was going to look at, and I forgot to look at the tops for the day. So let's take a quick look at that. Geez, this one was up 207%. Let's see what else we have. AMC up 24%. You love to see AMC on this list. Naked Brand up 18.67%. And let's take a look at the top losers. YVR, I remember seeing these guys before, and that is it. Okay, so we were going to take a look at the DTCC filings, and let's see if there was anything new. Man, these filings are just getting out there and approved. So I remember we had the model framework. So these two are relatively new, I believe. Yeah, the framework, and let's see what this one. So DTCC 2021 12012 says proposed rule change consisting of modifications to the text of the rules and the procedures of the service guide for the DTC Canadian Link service and the DTC operational arrangements relating to the elimination of the Canadian dollar settlement feature of the Canadian Link service. Boy, oh boy. And it looks like this one actually already passed. So there we go. And then there's 009, NSCC 009 says modify the rules and procedures of the National Securities Clearing Corporation in connection with the implementations of Section 1446F of the Internal Revenue Code of 1986. I have no clue what this is. I wonder if in the proposal, if it'll actually say what that rule is. So let's see. Okay, so the code of 1986, as amended, that was enacted as part of the Tax Cuts and Jobs Act of 2017 and Treasury regulations or other official interpretations thereunder, as in effect from time to time, collectively Section 1446F, as described in greater detail below. And here it is right here. So Section 1446F was enacted on December 22nd, 2017 as part of the Tax Cuts and Jobs Act of 2017, and the U.S. Treasury Department finalized and issued various implementing regulations on October 7th, 2020, including the tax withholding required pursuant to Treasury Regulation Section 1446F upon the transfer of an interest in a publicly traded partnership. Okay, so whenever there's transfer of an interest in a publicly traded partnership, okay, it is the NSCC's understanding that Section 1446F withholding is designed to ensure any non-U.S. person, either individual or entity, appropriately files a U.S. federal tax income form following the sale or disposition of its interest in certain partnerships. Gosh, these are just so non-user friendly. Let's see. So 1446F it generally imposes a 10% withholding on tax payment. Okay, so nothing super crazy here. It's weird that they're talking about tax type stuff. And again, this is 35 pages. Is it actually 35 pages? Pretty much, yeah. I mean, so I really don't have time to dive super deep into this, but it is, it seems more like tax things. Nothing too crazy whenever it comes to the squeeze, but for all I know, this is like directly involved in the squeeze for something that they found and they want to change. It gets wild and crazy around here. Yeah, Chris Fit says, just buy what you can and hold them for as long as you can. We will squeeze those hedges dry. Absolutely. And I'd agree with that statement personally. I mean, of course, make your own decisions, but GameStop crypto stock. Okay. I would agree with that just overall, because for the simple fact that the apes holding, it really costs them nothing. Again, it's that opportunity cost, right? And you can see here, I mean, today we were up a good amount percentage. I mean the stock, if you've been in the stock for a few months, you're very much up and you're feeling very good. And the short interest, it costs the hedge funds a lot of money to hold their short position. Holding a short position is not free, okay? And do not be fooled by anyone telling you it is free. It's not free to hold a short position, okay? It costs your short interest. At the very least, that's what it costs. It also costs you your sanity. It costs you a lot of things in order to be short in a position. So keep that in mind. The apes can hold this for as long as it takes. The hedgies are the one who are battling these new filings, who are battling the short interest, who are battling like everything that's going on. They're the only ones battling it. So Charles says, so it seems like there's a little bit of confusion. Charles says they cannot buy fake shares they printed. Charles says they need real shares, which most people don't have. And I see here, somebody said it down here. Mike says, no, Charles, they have to buy the fake shares to get the real shares, and they can't. Exactly. So yeah. So Charles, that's what they have to do. So they can't cover their real shorts with fake shorts. Right. So essentially, Charles, like you're right, but I think it's a little hard to believe, right? Because essentially, the way I think of it is they're gonna have to buy that share, right? That fake share, and then they're gonna have to buy the real share. So, I'm not sure exactly like the intricacies of how that works, but I kind of think of it as like just basically dumping money into the stock and, just having to buy these shares. I mean, it's really, they put themselves in such a bad position with these synthetic shares. There really doesn't have to be many synthetic shares. Let's say if you believe there's only, let's say AMC has 500 million shares. Let's say you think there's, 50 million shares that are synthetic, right? Or 550 million shares that are synthetic. I mean, it doesn't take many shares for it to be a lot of money, especially when the apes are so diamond handed that the apes hold through the dips and they hold through the freaking rips. I mean, the apes are insane. I say it with so much respect and love. It's almost like it is beginner's luck, where the apes are not acting like a traditional player, right? A traditional retail investor, because in traditional retail investing, the stock goes, if it's dropping down, all right, well, it's time to cut your losses and go try something new, right? Or you set your stop loss. If it dips a little bit, get out, try to go somewhere else. The apes are doing something that is great, I'm sure, but it's just so crazy that these hedge funds can't fathom why the apes would hold from $70 to $30 and so on and so forth, right? We are completely confusing these hedge funds to the point where these guys, they don't know which way's up. They don't know what the heck to do. They don't know anything. These guys they can't shake us. They cannot shake us. And it blows their mind, right? So they're trying all these tactics and they're not working. They work for some apes, sure, absolutely, but realistically, they're not working for all the apes, not at all. And that is where it's so dangerous for the hedge funds, because the apes are not traditional retail, investors. They are truly a new breed of not bears and not bulls. They're truly just apes who are going to buy and hold just like seemingly forever. It's wild. CT says, isn't tomorrow T plus 35 from the June 2nd up? Actually, I'm not sure, CT, but if it is T plus 35, then historically, I think there was one or two times where T plus 35 wasn't crazy or wasn't like green. So I'm curious to see. Umber, Citadel Connect. No, I haven't covered that. I'm not sure I'm familiar with that one. Velocity says, do you think they've started covering? Not at all. I really don't think they've started covering. I think they are stuck. They're just stuck. For whatever reason, they're not covering. Again, it really doesn't make much sense to me. I have a few thoughts as to why. Maybe they haven't covered yet. But realistically, I think they think that they're going to be able to get out of this still. And it's cheaper for them not to cover and pay who knows how much in short interest and continuing to short the stock. And because they continue to short the stock, because if it runs, they're going to have to pay a whole lot of money, right? That would the only reason it would make sense for them to continue shorting, right? it has to be financially worth it for them to continue shorting rather than covering the stock. I know I feel very heavily convicted personally that the apes aren't going anywhere. Even through all of this that's gone on, why leave now, right? Why leave now? So I'm very confident the apes are probably going to continue to hold through all of this, and that the hedge funds are eventually going to have to cover. And whenever they cover, you're going to know that they covered, right? Because not only are these numbers going to go all the way down, but the stock is just going to continue to run, right? It's just going to continue to run pretty heavily. And even when these numbers go down, keep in mind, these don't include the naked shorts, right? That's what, from my understanding of these don't include the synthetic shares, anything like that. And while these numbers may go down, the stock is running. I don't think that's the end, because if they're covering those, if they're getting margin call, there could be so many different ways that this could go down, that I'm just going to play it very slowly and have my own personal exit strategy. And, you know, I recommend you have your exit strategy as well. And again, my exit strategy is not a number. I'm not going to say, well, if it hits $1,000, I'm out, because that doesn't make any sense. Because the way they're going to have to cover isn't going to be like, okay, we'll cover up to $1,000 and that's it. Like, that's going to be the end. It'll dip from there. No, why would it be such a specific number like that? So that's why I'm just going to wait, play it super slow, have my floor, let it go up, and then sell all the way up back down. This way I can make out pretty well. They cannot cover legitimate shorts. Yeah, actually, that's good. Let's see how many options are actually in the money right now. Oops, just misspelled that. So currently in the money are 65,000 contracts. Really not enough, I don't think, yet to be any kind of gamma squeeze personally. Last time we saw a gamma squeeze, it was around 190,000 shares. Or options, 190,000 options, which equates to around 19 million shares. And we're really not near that. This is like 6 million shares. So we would need a whole lot of contracts in order for this to really get crazy. I suppose it's possible, right? If it runs up, is this a big options week? Let's take a look here. So options, there we go here, options. Yeah, there could be an amount. I wish I could enter a number in here and it would automatically. Oh yeah, we can just scroll down. Yeah. So if we go down here, we can see where's the strikes. I guess we don't have that here just yet. This is pretty cool because you can see the in the money options here. What it's looking like. Can we hit historical data? Yeah, here's some historical data. Failure to delivers. SSR trigger. Oh, wow, that's pretty cool. But I don't think I can see different strike prices for where we get more things. So that's all right. Robert says, anyone else feel like the shorting was very weak today? Right. So typically in my hypothesis is that whenever they're not shorting so much that day, that the stock is probably running, because it costs them a lot of money. They have to continue to short. GME has also been a little less interesting as far as moves. GameStop is a sleeper, but when it blows up, it'll blow up. But AMC is making the moves at the moment. Right, and that's a great point, Houston. Houston says, GameStop, and maybe this is one of the reasons I'm also not talking about it so much is, number one, I feel like, yes, they're going to be moving together. I feel like the DD is relatively similar. And on top of that, but right now, GameStop just really isn't moving much. And, you know, granted, it moved like 10% today, but, you know, AMC moved 25% basically today. So there's a few different reasons, but at the end of the day, I mean, GameStop, make no mistake, GameStop was originally, and you know, I haven't looked recently, but from my understanding, was much more heavily shorted than AMC is. Like they're more more naked shorts than the float, right? Because GameStop has a relatively small float. I believe it's about 50 million shares, whereas AMC is 500 million shares, right? 50 million, 500 million, and so. From my understanding, GameStop is like heavily naked shorted. We're gonna have to buy the float back multiple times. People are saying that AMC is also, you know, 2.5 billion naked shorts, where they're gonna have to buy the float like 5 times. Again, I haven't really found a way that I can like. I don't think anyone has really found a way that they can prove those numbers, that they can anything like that. Like, but that seems to be the general understanding, and you know, I'm all for it. I really hope that's the case, because that'd be fantastic. Either way, whether it's that or this, I don't personally feel like it's squeezed, and I still feel like it has so much more to go. All right, let's talk about these over here a little bit. So we talked about these catalysts, like looking pretty legit. And you know, this is a quick thing about these news articles, right? We see so much. Houston, I agree with you. Houston says TA's technical analysis is more interesting on AMC. Yeah, I'd agree. So we can see here AMC, you know, yesterday, what was everyone saying? Oh, AMC's down because COVID is blah, blah, blah. And COVID is, you know, this is all COVID's fault, and COVID is blah, blah, blah. All the news things was saying AMC is down for this reason, this reason, this reason. And, you know, why is AMC up? Let me see. AMC up. Do they have articles out here? Dow Jones rallies. AMC, what does it say about AMC down here? AMC surges. Okay, so we have some bounce articles. Skyrockets on heavy volume. Okay, cool. So there are some articles here. EMC Entertainment outperforms market. Very nice. Finally, some freaking good articles. But yeah, people don't seem to find these articles. People seem to warning EMC resistance. See, and then they have these, like, I don't know, some of these clickbait videos. But anyways, so we're going to continue over here, and you know, I figured I'd read this really quick. I seems pretty. Oh boy, hold up. Back in 2008, my dad and his best friend Earl invested in VW. My dad sold early with paper hands. Earl diamond handed all the way to the top, making bank. My dad lives in a mobile home, in a motorhome in Walmart parking lot. Earl is my stepdad now. Be like Earl. And so I don't know. I'm not telling you what to do, how to trade. You make your own decisions, but pretty interesting. Chris says, wait, hold on. Let me see what Angelina says first. I'm going backwards. Does anyone work their 401k or IRA is in trouble if it is left where it is? I'm getting nervous with numbers decreasing in my IRA. Does anyone work their 401k? Angelina, I guess, I don't know. I really don't know the answer to that personally, and you know, do whatever you're gonna do. Don't do what I did. Make your own decisions. I moved my 401k. I moved everything to AMC, and this was back at $10. So very, very cool, but yeah, so a little risky. So Chris says, I don't know if it's real or not, but there's a video put out that showed $12 million from one hedge fund or institution in call options. Yet another put $2 million that they bought in puts. Right. So this would be hedging their bets. Like if it's the same institution, they're probably hedging their bet, and basically hedging is like if they think the stock, they're going to buy calls, right? Because they really think the stock is going to go up. So they buy a bunch of calls, and if for any reason the stock doesn't go up, then they have those puts to kind of hedge their money, right? And like make some money back. They lose, but they don't lose as much. And that's kind of like the gist of it. But if it's hedge funds, and here's the deal, we know that there are institutions going long, a lot of institutions going long, and there are some institutions going short on it as well, right? And these institutions that are going short, in my personal opinion, not the best moves, but if they're they manage their own risk. I can't teach them how to trade. Houston says net borrow of a negative 1.26 million, likely lose 5 million shares. Right. So yeah, I mean yes, there were, as far as shares borrowed today, there were 14.3 million shares borrowed today, according to this data, right? Again, 65% of the exchange. 14.3 million, but they returned 15.56 million for a borrow change of negative 1.26 billion. So they returned more shares than they borrowed today, according to this, right? Remember, this does not include naked shorts, does not include dark pools, does not include like ETFs and stuff, that the crazy antics that are going on there. This is just this basic information, but keep that in mind whenever you're looking at like, this information, and whenever, somebody gives you that data, I guess Matt Kors said that they borrowed 5 million shares. Well, yeah, they borrowed way more than 5 million shares. They borrowed more than 10 million shares, right? But how many shares did they return? Borrowing shares is not the only, and maybe he has another number where the borrowed change is 5 million. Maybe he's looking somewhere else that I'm not looking. I don't know where he got his numbers from, or what he's looking at day to day. But just keep in mind, that's why I always say, and I know it's annoying, take it with a grain of salt, because you really don't know which way this is going to go. You really don't know how at the end of the day, like, this is going to be, and which is why I just play it super slow. And I think of it very simply. I don't look at my full account. I look at, okay, are they covered? I don't think they're covered. All right, I'm gonna like buy and hold. Like, I'm just gonna hold, right? Squeezes and squoze, and that's why I hold so much. Pauline, welcome. We'll take a quick look about what I think about MMAT stock. Metamaterials. All right, let's look at the 5-year really quick. Oh my goodness, that is ridiculous. 3-month. Okay, so let's look at the 3-month. Ooh, this is looking crazy. Profile, what are these guys doing? Oh, obviously materials. Torchlight Energy. Oh, Torchlight, is this automotive, like green automotive and stuff? They're doing AI. Man, these guys are doing the most. Okay, so let's look at their profit annually really quick. Gross profit has been, so 4K, almost 5K, 3K, and then down. So the profit has gone basically to zero. I'm not sure why that is. Again, they could be investing in themselves. There could be a million different reasons why it went down, but I'm not seeing off the top, like at a quick glance, I'm not seeing anything that would get me super excited about what's going on here. Institutional ownership is 2.62%, super small. Analysts are low as well. News, I'm not sure if there's any kind of news catalysts that are going on. But the chart, I mean, I'm not sure if this is a heavily shorted stock or what, but Pauline, you made, I'll never forget, you called the football one, I can't remember the exact name of it, but you called that one, and that was that. So if you think the stock is going to run, if it's heavily shorted or something, very possible. And maybe that is the piece de resistance for you, but I don't know. Not my favorite chart is what I'll say. Although I will say I do love retracements whenever it comes back down. Question is, has it bounced quite yet? I'm not seeing any confirmation that it bounced. Sure, it paused for like a millisecond, but not seeing any kind of good confirmation that I like for a bounce, so I'll just kind of leave it there. Meta merged with Torchlight. Oh, okay. See, so I don't even know. Offering. See, I'm not sure if they merge, when they're gonna merge, how, or I guess I see when they're gonna merge, but are they gonna absorb is it gonna be this price? Is stock gonna stay at this price? Just a lot of different questions. Is heavily shorted. I mean, we'll take a quick look at MMAT about how it's shorted. Short interest, 4%, utilization 51. Shares on loans are 16.5 million. And what is the float? Free float 230. Okay, the short interest was around 10%. Oh, snap. I didn't mean to do that. I don't know how to fix that. Oh, is it like this? Oh, okay. Yeah, that's pretty easy. So, yeah. Oh, cool. Just testing this thing out. Yeah, I mean, the short interest is, what does this say again? 4.09 was around 10. Nothing too crazy. Oh, it was a reverse split. Oh, okay. I don't know how they show reverse splits. Oh my gosh, a reverse split all the way up to here, and then it completely tanked. This might be a little bit confusing, but I will say I love buying the dip, right? I love buying this kind of dip, especially if you feel like people are confused on the reverse split. It's just not right. Something went wrong, and then it is going to skyrocket. You're gonna have to make your own decision there, but if it's a dead cat, then it's a dead cat. Seems like people are pretty bullish on it. I see Lee over here saying there's supposedly a deal with Tesla, and if there was a deal coming up with Tesla, then dang, this could be very, very, very nice. But yeah, and I'll just give you that, and I'll end by saying I have no clue. You guys knew way more than me with this, which is great. Maybe you guys can help Pauline better than I can, because I obviously have no idea. I didn't know they reverse split. I didn't know they were merging. I didn't know about the possible Tesla deal. Like, I am very much not educated in the stock, just from a chart setup, options profiles, or I mean profile financials, institutions, stuff like that, just scare me a little bit. But spike was a previous dividend. Yeah, so I'll let you take care of this one. Let me see if there was anything else I wanted to talk about. No, I think that's about it. I'm going to go ahead and start wrapping up here. I'll let you guys chat with Pauline, and you guys can get through this together, looking at these numbers. I'll leave this here pause, or you can pause it here if you want to take a look at this and see what you want to do with this. All right, but I'm going to go ahead. Oh, MJC, it's a dead cat in my opinion. Well, I respect that, but we'll have to see. So, but all right, y'all, I will let you guys chat it out amongst yourselves and see if we can come to a conclusion. But I'm gonna go ahead and get it wrapped up. I'm gonna go eat some dinner. I'm starving, and I'll catch you guys later. All right, but you guys have a fantastic night. I'll see you guys later. Peace.